Many of the taxpayers that come to me regarding taxes and tax brackets and so forth are quite confused when it comes to capital gains. So the first thing that they tell me is, Bert, I'm in the 20% as far as the capital gains. I'm going to sell some stocks. So I know I'm going to be paying 20% in taxes for capital gains. And that is definitely not the truth or the truth when it comes to capital gains. Now, capital gains goes hand in hand with your ordinary income taxes and based on your taxable income. So what I want to do is I want to clear the table and make sure that all of you understand that there's a reason why capital gains enjoy a lower tax than ordinary income taxes or taxable income for that matter. And the reason for that is that the IRS and the US government understands that in order for you to generate capital gains, you have to expose yourself, your business, and your money to potential losses. So, because of the fact that you're taking a risk with your money to grow a business, to perhaps hire employees and increase the US economy, the government is willing to give you a break when it comes to the taxation of capital gain moving forward into your tax years. So, just to give you an idea from the table, and this is if you're married filing jointly for tax year 2026, if your total taxable income is between 0 and 98,900, your capital gains tax is a major goose egg, is actually 0. So if your income falls under $98,900, you pay no taxes on your capital gains, which is a win-win for you, for your business, and also for your family. Now, when your income surpasses $98,900, which is $98,901, and it goes all the way to $613,700, then your capital gains bracket is now 15%. So you have to be making north of $98,900 and all the way up to $613,700, and you will then pay a 15% capital gains tax. And then obviously anything over 613,700, then you are now in the 20% tax bracket. So obviously you can see the big difference between the federal income taxes on the 7 brackets that I have mentioned for traditional federal income taxes, which is the 10%, the 12, the 22, the 24, the 32, the 35, and the 37%. When it comes to capital gains, you will notice that the gaps are much wider, and you only have 3 tax brackets. You have the 0 tax bracket, you have the 15% tax bracket, and then the 20% tax bracket. The idea of tax planning, especially now in mid 2026, if you want to minimize your tax liability for the end of year, is you got to figure out where your income is going to come from for the rest of the year. And is that income going to come from, traditional income sources like salaries or 1099s, part-time work, or, obviously the W-2 income, or if you're going to take distribution from your IRAs, your 401ks, or any other source, versus if you're going to be selling a stock that is going to generate capital gains taxes for you. You have to measure those, because if you do proper due diligence, you can actually reduce your tax liability significantly between now and the end of 2026. And we have a software program that we could actually put in all of the different income sources and the amounts that you will have coming to you for 2026 and determine what your tax liability will be and how do we bring that lower by doing proper tax planning. So if you have any additional questions, please feel free to reach out. My name is Bert Salazar, and my telephone number is area code 888-477-0108. You can also send me an email at Bert, B-E-R-T, at Gables taxgroup.com, and I'll be more than happy to schedule a 20-minute conference call with you and determine whether we can service your needs or not. So thank you, and I'll talk to you soon. And I'll put a few more videos that I can assure you you will appreciate. So take care. Talk soon. Bye bye.